When Harry Arthurs was asked to review the unfunded liability at Ontario's Workplace Safety and Insurance Board, the former president of York University found himself listening to both sides of an ongoing dispute over experience ratings. HR Reporter TV met up with Harry Arthurs to talk about the findings in his Funding Fairness Report. What is an experience rating?
The rates should be highly individualized to reflect that employer's claims experience and accident frequency. And that system is called experience rating.
What is the controversy around experience ratings?
I heard an enormous amount on this subject. I probably heard more on this subject than I heard on any other subject. And the views were more passionately held. The employers said, look, it's an intrinsic part of any insurance system that your premium should be commensurate with the costs that you're imposing on the system. They called that insurance equity. The workers said, number one, the whole point of a workers' comp system is that the burden of industrial accident should be shared by all employers. And number two, giving people financial incentives or imposing financial disincentives on them based on their accident record doesn't make them behave better, it makes them behave worse. Why worse? Because they lean on their workers not to report accidents, called claims suppression.
What were your findings?
I heard from 50, 60, 70 workers that they had been abused, had been victimized in this way. And I'm sure what they were telling me was absolutely true. What I couldn't figure out was how frequent is this abuse? Is it just 60 or 70? Is it 60,000 and 70,000? I don't know, and nobody knows. Moreover, looking at the employer's claims, it's not clear whether people are responding properly to these incentives, whether the prospect of getting a reduction in your rate for next year actually prompts you to go out and install safer equipment or better training systems or whatever. The evidence supporting that proposition, which is not counterintuitive, the evidence supporting it is very weak.
What were your recommendations?
Take one significant sector, I don't mind which one it is, but one significant sector. Design the best system that you can and run an experiment for 3 or 4 or 5 years and monitor that experiment very, very carefully so you get answers to the two questions. Number one, is this doing any good? Number two, is this doing harm? You can do that to some extent at least if on a go-forward basis. It's extremely difficult to look back 5 or 10 or 20 years and reconstruct events. Just to take one example, accident rates have declined considerably since 1997 when experience rating has gone down. No doubt of that. And it would be tempting to leap to the conclusion that experience rating is therefore responsible for the reduction in accidents. But at the same time, there's been a huge reduction in manufacturing employment. And manufacturing was a very fertile source of fairly serious injuries. So is the decline in the aggregate accident rate the result of the introduction of robotics, the substitution of machines for people? Is it the result of a slumping industry which is not pushing the assembly line to work at maximum speed so people can work at a somewhat leisurely and therefore safer fashion? We don't know. You can't go back easily and find out. But on a go-forward basis, you have a better chance of doing that.